I was recently speaking with a senior executive at one of Japan's largest keiretsu industrial groups, a man who has spent the last 30 years practically living on a flight between Tokyo and Shanghai. In his office, he used to keep a framed photo of a massive factory opening in Guangdong, a symbol of what he called the indestructible bridge of trade. But when I visited him last week, the photo was gone. Replacing it was a sleek, minimalist map of alternative supply chains across Southeast Asia and Texas. When I brought up the news that the massive 200-person business delegation to Beijing had been indefinitely postponed, I expected him to be furious. Usually, these industrial titans are the first to lobby government to smooth things over with China for the sake of the quarterly earnings. Instead, he was eerily calm. He leaned back, looked out over the Maricauchi business district, and said something that felt like a cold breeze in the room. For 30 years, we chased the dragon for profit. Now we're paying a premium just to sleep soundly at night. That premium is the cancellation of a decades-old tradition. A 200-person delegation isn't just a meeting. It's a physical manifestation of economic interdependence. Seeing it vanish overnight under the Takaichi administration is like watching a divorce finalized after a 50-year marriage. What's striking isn't just the cancellation itself, but the lack of protest from the business elite. The separation of politics and economics that defined post-war Japan has been unceremoniously buried. There is a new, cold logic taking hold in Tokyo, a fortress mentality, where the administrative leviathan has finally tamed the corporate world. To the outside observer, it looks like a missed opportunity or a diplomatic failure. But to the people inside the room, it's a calculated retreat. They are no longer global arbitrageurs. They are becoming the home guard of a protected civilization. It leaves you wondering, how did a nation that practically invented the global supply chain decide that being smaller but safer was the only way to survive? And what does it mean for the rest of the world when the third largest economy decides that the price of peace is higher than any profit margin China can offer? That opening anecdote is just. It's so powerful because it really encapsulates this profound, almost unimaginable shift in modern Japanese policy. We're watching the conscious dismantling of a framework that, underpinned 50 years of growth.
It really is.
So our mission in this deep dive is to analyze this strategic pivot, this new cold logic taking hold in Tokyo, which we're calling the fortress mentality. We need to get our heads around how that 50-year marriage between politics and economics, what's the Japanese term?
Sekei Bunri.
Sekei Bunri. How that was not just buried, but it seems actively replaced. We're going to unpack the policy tools, the corporate reaction, and the deep historical context that allowed the world's third largest economy to say, okay, smaller but safer is our only path forward.
And that disappearance of the business delegation you mentioned, that's the symbolic burial of Sekei Bunri. For decades, that separation, the idea that trade just keeps going, regardless of political fights, that was the bedrock.
Right.
And when you talk about a keiretsu, you're talking about these massive industrial groups like Mitsui or Sumitomo. They used to hold enormous sway.
They practically ran the country's economic policy.
They did. But now the new logic says, no, national security and social stability come first. They have to override, corporate performance and quarterly earnings. It's a fundamental retreat, prioritizing resilience, the fortress over global market efficiency.
Okay, let's unpack that. Let's trace this political inflection point. It really seems to have crystallized almost overnight with the Takaichi administration in late 2024. If you had to pinpoint one single moment, one statement that just made it official, what would it be?
I think the defining moment, the point where it became undeniable, was a statement from Prime Minister Sanai Takaichi herself. She was in the Diet November 7th, 2024, and she said it point blank. A Taiwan contingency is a Japanese contingency.
Wow. Just out in the open like that.
Right. Now, analysts have known this for years. Taiwan is Japan's critical geopolitical buffer. It sits right in the first island chain.
A conflict there would choke off their sea lanes, their energy supplies, everything.
Everything. But what Takaichi did was take that anxiety out of the think tank reports and put it at the very center of government policy. She made the implicit explicit. And in doing so, she was suggesting Japan could exercise the right of collective self-defense.
That's a tectonic shift. Previous administrations were always so careful to maintain ambiguity on that exact point, just to avoid provoking Beijing.
Absolutely. And the reaction from Beijing was immediate and forceful, which just confirmed the stakes. China saw it as a serious provocation, not a slip of the tongue, but a deliberate trial balloon.
Testing the waters.
Exactly, testing Beijing's thresholds. So the response was a mix of diplomatic and economic tools. You had the formal protests, the Japanese ambassador being summoned.
The usual playbook.
The usual playbook, but then came the economic pain. Beijing issued travel advisories, which hit the tourism sector hard, and then they temporarily suspended imports of Japanese seafood.
And that seafood suspension, that hits specific regions, doesn't it? It's a targeted strike.
Yeah. It's very targeted. It hits places like Hokkaido that really rely on that Chinese market. The goal was crystal clear. Beijing wanted to stop this rhetoric from becoming a structural trend, from Japan getting more involved in the Taiwan question. They were drawing a very sharp economic line in the sand.
Which brings us to the paradox at the heart of this. Japan is taking this bold, almost antagonistic posture towards its biggest neighbor. Why now? The analysis seems to suggest it's driven by, surprisingly, fear of its closest ally, the U.S.
That's where the cold logic really kicks in. This shift isn't just about China's actions. It's about the looming specter of American retrenchment.
The America First effect.
Precisely. The America First strategy of the Trump administration, this transactional view of alliances. It's brought back what they call the fear of abandonment in Tokyo, Washington's ambiguous signals on Taiwan. It's shaken Japan's belief in those ironclad security guarantees.
So it's a hedging strategy. If you're not sure the U.S. will show up, you have to raise your own value.
Exactly right. Tokyo's response is a self-help posture. By proactively signaling support for Taiwan, Takaichi is tying Japan's own security directly to the strait. It raises Japan's bargaining power within the U.S. Indo-Pacific strategy. They're basically saying to Washington, our commitment is serious, but it's contingent on your commitment being just as serious.
And it's an aggressive move. It risks inflaming things with China to stabilize the relationship with the U.S.
It does. And Takaichi seems to be leveraging all this external tension, the threat from China, the unreliability of the U.S. to generate political capital at home.
Turning an external threat into internal legitimacy.
That's it, exactly. And you have to understand the context of Japan's domestic politics. The old LDP faction system, the system that dominated for decades and kept prime ministers in check, it's collapsed.
Right, the factions are gone.
Largely. So Takaichi is operating outside those old constraints. She's free to build this strong leader persona, which, we're seeing in a lot of places globally.
And the external threat is the perfect narrative to do that.
It's the perfect vehicle. She's using it to mobilize conservative support, to push through revisions to security documents, and critically, to get that defense spending up. It cements her authority, and it distracts from tough domestic problems like inflation and demographic pressures. Which
has led to this historic military buildup. We're seeing a fundamental shift in the self-defense forces. So what are the key priorities here?
The buildup is, it's comprehensive, it's fast, and it is incredibly expensive. The biggest piece is the investment in long-range strike capabilities.
Tomahawks.
The Tomahawks, yeah. The acquisition and deployment of U.S.-made Tomahawk cruise missiles on their destroyers. This is a capability Japan avoided for decades. Beyond that, you've got enhanced missile defense, huge investments in space and cyber, and a big push to build up munitions stockpiles.
And the timeline is just as dramatic.
It is. The Takaichi cabinet said they'll hit the 2% of GDP target for defense spending by the end of fiscal year 2025.
That's 2 years ahead of the original plan.
2 years ahead. It's unprecedented in post-war Japan. But this is where the rhetoric hits the cold, hard reality of the numbers.
The fiscal reality.
Yeah.
That 240% debt to GDP number is just staggering. I mean, you have what is arguably the most fiscally constrained major economy in the world, and they're accelerating this massive spending. That really defines the word premium, doesn't it?
It really does. Funding is a massive hurdle. Japan's debt to GDP is near 240%. And historically, they've failed to implement tax hikes to cover these kinds of costs. Plus, 2% is impressive for Japan, but neighbors like South Korea and Taiwan are aiming for 3.5%.
So the pressure is still on.
The pressure's still on while they're also grappling with stimulus packages, inflation. Sustaining this spending without huge tax hikes or more borrowing is going to be incredibly difficult. It just shows you how deep the security anxiety really is.
Okay, so the military buildup is one half of the story. That's the hard shield. But this fortress mentality needs an economic shield to match. How has Japan institutionalized this? How do you turn this idea into actual law?
They've moved with extraordinary speed. The centerpiece is the Economic Security Promotion Act, or ESPA. It was adopted in 2022, and it's really significant because it's the first standalone economic security law of its kind anywhere. It formalizes the state's role in managing economic risk for strategic reasons.
And it's all built around two core ideas.
Two foundational objectives, yeah. Strategic autonomy and strategic indispensability.
Let's break those down. What does strategic autonomy mean in the context of the ESPA, and what are the mechanisms to enforce it?
So, strategic autonomy is basically the state's ability to keep society functioning energy, communications, food, health, even if they're facing external coercion or supply shock. In simple terms, it means fixing the over-reliance on potentially hostile actors.
That means China.
In almost every key sector, yes, it means China. And the ESPA provides the tools to do this through four main pillars. Together, they create this economic security shield.
Okay, let's walk through those four pillars. This seems to be the heart of the whole thing.
The first one is all about supply chain resilience. The government identifies essential products, things that are vulnerable to disruption or a single supplier. We're talking rare earth minerals, specialized machinery, pharmaceuticals.
Things you absolutely can't live without.
Exactly. Then the state steps in with subsidies and loans for companies to create sustainability plans. It's a direct incentive to diversify where they get their stuff.
And the data suggests Japan is uniquely vulnerable here, right? More so than its peers.
Staggeringly so. If you compare Japan to the G7 average, they have a much higher number of products that rely on concentrated supply chains. For machinery, Japan has 148 such products. The G7 average is 12.
Wow.
For basic industrial chemicals, Japan has 141. The G7 average is 30. So what that means is if one factory in China goes offline, Japan's manufacturing base feels that shock 10, maybe 20 times harder than, say, Germany. It makes this pillar absolutely essential.
That really puts it in perspective. Okay, so what's the second pillar?
The second is protection of critical infrastructure. This is a new layer of government oversight on hardware and software procurement across 14 critical sectors.
So transportation, communication networks, energy.
All the backbones of society. Transportation, 5G networks, energy grids, finance, water supplies. The goal is to make sure these systems can't be compromised or controlled by a hostile foreign entity in a crisis.
And the last two pillars seem to pivot more towards technology itself.
They do. The third pillar is frontier technologies promotion. This means intense public-private cooperation to get a lead in key high-tech areas. Semiconductors are the big one, but also quantum computing, AI. The state is intervening with huge subsidies to make sure Japan has domestic capacity and isn't just resilient, but becomes indispensable.
And the final pillar seems to extend the government's reach right into the private sector.
That's the fourth one. Concealed patents and security clearance. This is a powerful new tool. It allows the government to classify certain patents as national security assets to prevent their public disclosure. And it's paired with a new economic security clearance system that requires background checks for private sector employees who handle sensitive data.
So this is a really comprehensive toolkit put together in just a couple of years. But the big question is, has it worked? Has Japan actually reduced its dependency on China?
And that is the central friction point. The honest answer is not really. Despite all the legislative ambition, Japan has made alarmingly little practical headway. The risk of supplier concentration is still stubbornly high. It shows how incredibly difficult it is to unwind decades of integration.
It's one thing to write a law, another to redraw the global supply map.
Exactly, and the data is just stark. Big rare earths, essential for high tech. Japan's reliance on China has actually increased. It went from 50% in 2014 to 70% in 2023.
Increased, even with all this focus.
Increased. And for other key items, China is still number one. Rechargeable batteries, 52% reliance. Machine tools and industrial robots, 30%. And for finished consumer goods, it's near total. Laptops are 99.4% reliant on China. Mobile phones, 83.7%.
So the fortress is still structurally intertwined with the very entity it's trying to protect itself from.
It is. It sounds like Japan has the blueprints for the fortress, but the foundations are just too integrated to be swapped out quickly or easily.
Which brings us back to the corporate world, to that Keiretsu executive. The political risks are clear. But what does the hard data show about how Japanese companies are actually responding? Are they really decoupling? Or is it something more pragmatic.
The overwhelming evidence points to a strategy of managed risk through diversification. It's the China plus one strategy, not outright decoupling. Corporations are thinking with cold financial logic. They're managing risk, but they're avoiding these drastic, expensive reversals that would just kill their profitability.
They're hedging, not retreating. That's a key distinction. So let's look at that reluctance to leave. Does geopolitical risk actually make a firm more likely to pack up and exit China?
Surprisingly, no. The research shows that more geopolitical risk does not significantly increase the probability of a firm divesting. In fact, firms with deeper sales exposure to the Chinese market are less likely to exit.
Because of sunk costs.
Exactly. Immense sunk costs. And we're not just talking about financial write-offs. We're talking about decades of investment. Specialized machinery, local human capital, established distribution networks, political connections.
You can't just replicate that somewhere else overnight.
You can't. And that's why actual physical relocation, closing a factory in China and opening a new one in ASEAN within 3 years is statistically insignificant. It's just too rare.
So if they're not leaving their cash cow, what does China plus one actually look like on the ground? Where's the plus one happening?
It's happening in ASEAN. Geopolitical risk significantly increases the probability of establishing new production bases in places like Vietnam, Thailand, and Indonesia. Look at the numbers. Japanese manufacturing affiliates in China peaked around 2014 and then started to decline. At the same time, the number in ASEAN just kept rising, and they almost reached parity by 2022.
So new growth capital is going to Southeast Asia.
That's the hedge. And you see it in the trade patterns, too. Exports from Japanese affiliates in ASEAN back to Japan actually surpassed those from their Chinese affiliates after 2018.
Which lines up perfectly with the U.S.-China trade war escalating.
It was the shock that forced their hand. And you see it in new investment, too. In 2019, the share of new Japanese affiliate entries in ASEAN actually overtook China for a bit. It shows the strategic pivot is real.
And does this apply to procurement in general? Not just their own factories?
Yes, absolutely. Firms with high exposure to China risk are much more likely to add non-China Asia as an alternative source for materials and components. But, and this is key, they do it alongside continued sourcing from China.
So they're building redundancy, not replacing the original.
That's the perfect way to put it. China's share of Japan's total imports fell from about 20% to under 15% by 2022. But non-China Asia's share stayed consistently higher, around 30 to 35%. It's a risk hedging mechanism.
Okay, so what about reshoring, bringing capacity back to Japan itself? Is the domestic manufacturing base actually seeing a boost from this?
That's a great question. Full-on factory reshoring is rare, but we do see clear evidence of investment reallocation. Manufacturing firms with high sales in China are more likely to slow down investment growth in their Chinese affiliates while increasing capital investment at home in Japan.
So it's a partial shift.
A partial but tangible shift. It indicates they're prioritizing domestic investment, maybe in R&D or high-end production. It's a subtle form of self-help, making sure new capacity is built inside the fortress, even if the old factories stay where they are.
Let's pivot now to the most expensive part of this whole strategy, semiconductors. This feels like where the state really steps in to try and force the issue of strategic indispensability. What's the scale of the government's commitment here?
The scale is immense. It's frankly unprecedented in modern Japan. The government has allocated a staggering 3.9 trillion yen. That's about $25.5 billion in subsidies in just 3 years.
And that's 0.71% of their entire GDP.
Exactly, on one industry. And they're doing this despite having the world's highest debt-to-GDP ratio. It just shows you how high a priority this is. Japan used to be a leader in chips, but its fabrication capacity has really diminished. This money is targeted specifically at bringing manufacturing back.
So where is this war chest going? What are the big bets?
More than half of it is going to 2 huge projects. The first is a partnership with TSMC, the world leader. They're getting 1.2 trillion yen to build a facility in Kumamoto called JASM.
And what will that factory make?
It's focused on manufacturing legacy semiconductors. The reliable, proven chips you need for cars, industrial systems, consumer electronics. This is a foundational security move. Localize the proven tech so your core industries can't be cut off. It's a direct hedge against Taiwan risk.
Okay, that makes sense.
Yeah.
But the second project sounds like a much bigger gamble.
It is. The second project is Rapidus. It's gotten 920 billion yen in subsidies. This is a joint initiative of 8 major Japanese companies, Sony, Toyota, big names, partnering with IBM, and their goal is incredibly ambitious.
What are they aiming for?
Production of cutting-edge 2-nanometer semiconductors by 2027. This is the absolute technological frontier.
But wait, Japan has tried big state-led industrial policy before, right? Back in the 80s with MIT, and those efforts often struggled. What makes this different?
That's the key historical context. The old MIT policies were about catching up. They were about importing proven technology and getting really good at mass producing it. Rapidus is totally different. It's attempting innovation at the frontier.
It's not about catching up, it's about leapfrogging.
Exactly. 2-nanometer chips. You're basically controlling electricity at the atomic level. It requires technology that barely exists outside of labs. It is a very high-risk, high-reward bet.
Which sounds incredibly expensive and uncertain. What are the biggest risks?
The risks are immense. There is no guarantee that these subsidies will lead to commercial success. Cutting-edge chip fabrication requires constant exponential investment. But what this shows is that the government is prioritizing the security externality.
The geopolitical benefit.
Right. The benefit of reducing reliance on Taiwan is being valued higher than a guaranteed commercial return. They've decided that having that domestic capacity, no matter the cost, is worth the enormous financial risk. It's maybe the clearest example of paying that premium for a good night's sleep.
To really wrap our heads around this, we need to look at the deeper cultural and historical traits. Japan is often seen as resistant to foreign influence, but its economy is so vulnerable. What's the Galapagos syndrome, and how does that play into this?
The Galapagos syndrome is a great way to describe Japan's relative isolation, culturally, economically, linguistically. And this historical aversion to deep foreign integration has created these structural barriers that now act as a form of resilience.
In what way?
Well, look at the numbers. Inbound foreign direct investment, FDI, is just 4% of GDP. That's incredibly low. Only 1.9% of the population is foreign-born, and overall trade dependence is low at 37% of GDP.
So that isolation, which might have been an economic disadvantage in the past, is now a kind of accidental protection.
Precisely. This historical isolationism paradoxically makes it more resilient to things like elite capture or foreign political lobbying. There's just less leverage for an outside actor to exploit.
And this seems to feed into the politics of it, especially with public opinion on China, which is overwhelmingly negative.
It absolutely does. Japanese public sentiment towards China is profoundly negative, something like 85% unfavorable in a 2019 poll. That's one of the highest in the world. And it's fueled by historical conflicts, Tiananmen, and especially the ongoing disputes over the Senkaku Islands.
That seems to be a real turning point for a lot of people.
Many commentators see the Senkaku disputes as the moment that post-war ideal of Sekei Bunri was really severed in the public mind. And the domestic media landscape just caters to this.
A feedback loop.
A total feedback loop. Critical reporting on China sells papers and gets clicks. So the information space is inherently resistant to Chinese soft power. Any attempt by Beijing to complain about media bias just confirms the skepticism.
And what about the political structure itself? How does that provide insulation?
Well, the country's political homogeneity with the LDP's long-term dominance is a key factor. The system is less vulnerable to elite capture because the establishment is already so wary of Chinese power. There's a deep historical familiarity with China as a strategic competitor that goes back millennia. It makes them much harder to influence.
So we end up with this really complex conclusion. Japan is politically and culturally fortified, but its trade dependencies created this huge economic vulnerability.
That's it exactly. The whole fortress mentality is a desperate, calculated effort to fix that one big economic vulnerability using laws and subsidies to make sure the country's lifeblood can't be cut off without having to change the political and cultural resilience that was already there. They're just shoring up the weakest wall.
So we've tracked this calculated retreat from that indestructible bridge of profit to the construction of a fortress mentality. The policy shift under Takeichi is profound. We're talking accelerated military spending, the institutionalizing of economic security through the ESPA. They've decided the premium is mandatory now.
And the reality on the ground shows it's anything but simple. Corporations are avoiding that costly decoupling. Instead, they're doing this selective diversification, the China +1 strategy, expanding into ASEAN, reallocating some capital back home. And the national goal of strategic autonomy has led to these massive, high-risk industrial subsidies, like the 3.9 trillion yen for semiconductors. It's a clear prioritization of security over guaranteed commercial success.
It seems Japan has made a decision that securing its civilization and ensuring social stability is now the paramount national priority. It overrides the demands of global market efficiency and optimizing for the quarter. It's a cold calculation, The necessary price of peace and security in this new era is being paid, and it's higher than any profit margin the Chinese market can offer.